Good afternoon, everyone. My name is Ibrahim Chandna. I'm an analyst at IBK Capital Corp. So I'm going to give a little brief introduction before our panelists come up. So IBK Capital Corp is a boutique investment bank based in Toronto. Since our inception in 1989, we've been successful in raising over $5 billion for our clients. Some of our success stories include Canada Nickel, Great Bear Resources, which was acquired by Kinross in 2022. So my time with IBK began in 2022 as a summer analyst, where I had the opportunity to attend this conference for the first time. And now I'm back here as a panelist, so I'm very pleased to be here. So I'm going to introduce our first session. Please help me welcome Troy Boisjoli, Chief Executive Officer of ATHA Energy Corp, for a fireside chat with Matt Gordon of Crux Investor.
Fourth seat? Hey guys, hi. We're going to talk uranium, the nuclear fuel cycle. Troy, well, you better tell them a little bit about yourself and the company, and then we'll kind of dive into some questions.
Yeah, you bet. ATHA Energy, relatively new, listed in 2023, large-scale uranium exploration company. When I say large-scale, we have the highest degree of exploration exposure in terms of exploration projects across the Athabasca Basin, the Thelon Basin, the Anjikuni Basin, and the Central Mineral Belt in Labrador. We grew materially in the last year through acquisition. We acquired Latitude Uranium and 92 Energy in a three-way transaction, which closed last year, and that brought our flagship project into our portfolio, which is the Angulac project.
Right, and don't be shy. Where were you working before this?
Yeah, as you know, Matt, I've been in the uranium space for a long time. I came up through Cameco Corporation, exploration geologist there. Spent time in operations as a chief geologist at one of their operating mines. After that, I had the opportunity to join NextGen Energy and help develop the Rook I project from maiden resource right through to feasibility as the Vice President, Project Development, Operations, Exploration, and Community, which is a bit of a mouthful, but we were growing rapidly at that time.
Right, okay. So that's the background. Let's talk about the setup for uranium and nuclear. Executive orders flying off the shelf with your neighbors. That's got to help.
Yeah, it's excellent. That's off a backdrop of a uranium sector right now that is unlike we've ever seen it in this generation. I think you have to go back probably to the early 70s and the initial adoption of civil nuclear energy across the US, Western Europe, to see demand growth like we're seeing right now in the nuclear energy space. That was pre-10 days ago executive orders. Now you layer on the executive orders on top of that, and you have the largest nuclear market in the world that's talking about and committing to quadrupling of nuclear power domestically and abroad within the US. That's going from 50 million pounds on average, that's the demand of the US, 50 million pounds per annum, to 200 million pounds. That's substantial, considering the entire uranium market right now is about 195.
Right, and it gets worse because there's a bifurcation in the marketplace, right?
Yeah.
So maybe explain to people what's happening, east-west divides, etc.
Yeah, breaking down where uranium's produced globally. Kazakhstan is the largest uranium producer. About 40% of uranium supply comes out of Kazakhstan. There's been the emergence of a bifurcation in the uranium market over the last 3 to 4 years, which is materializing and solidifying now. What we see now is that about 85% of the Kazakh production is earmarked for China and Russia. You then look across some of the African projects. Niger, obviously, a difficult time right there geopolitically currently, into Namibian assets, kind of parceled off, offtake agreements, etc., going to China. That leaves, a growth profile that's growing in the U.S., needing to look domestically, and when I say domestically, within the North American sphere, for that fuel supply chain, because as it sits right now, it can't be satisfied in the U.S. I think even with significant continued investment in the U.S., they still won't be able to meet the actual demand that they're building. They produce around 1 million pounds of uranium right now, plus or minus. Consume 50, projected to go to 200, and peak of the last cycle, I think they produced about 6 million pounds per annum.
They need some friends.
They need some uranium.
They need some uranium.
Yeah.
Right, okay, so I think the picture we're building up here is there's a definite supply issue. The demand, if it stopped today, if we had no more demand than is on the table today, we couldn't supply that.
That's right.
Right? Yep. So, and it is continuing to grow, and we perhaps we'll stay away from the demand story because it's kind of baked into this conversation. Yep. The supply has got to come from Western sources. There isn't enough.
There's not enough.
Discovery, let alone pounds in the ground today. So what are we going to do?
Yeah, that's not unique to uranium, but I think probably amplified in uranium. We haven't had sustained influx of risk capital into exploration sector, et cetera, for a decade or longer. As a function of that, you look at the project pipeline in uranium, and it's very, very linear and it's very narrow. Okay, so you've got a few development stage assets that are moving forward. Underneath that, there's not a resource base to backfill those. There just isn't. There's not that pyramid of projects. So exploration, development, discovery needs to happen. It needs to happen in earnest. We're in an absolute structural supply deficit, and that's only going to get solved through continued investment in exploration and discovery, especially in geopolitically favorable environments to feed this growing market. That's ATHA's thesis. That's what we're built around. That's why we have the largest land position, exploration projects, over 17 projects across the best uranium jurisdiction in the world, which is the Athabasca. Sister basin to the north, the Thelon Basin in Nunavut. Very highly underexplored uranium jurisdiction in Canada. Right in between that is the Anjikuni Basin, and that's where our Angulac project is. And that's where we've been working over the last year. It has a historic resource of 43 million pounds, 0.69% U3O8. Contextualizing that, with Cameco as a chief geologist at Eagle Point, the grade of that deposit is 0.7. Okay, so for those that aren't familiar with uranium grades, 0.69 is a good grade. It's high-grade uranium. We like the framework of the story. Last year we stepped out, did 10,000 meters of drilling, 25 holes, intersected mineralization on every hole, expanded the footprint of mineralization there materially, and did a bunch of generative stage exploration work as well. And that all sets the stage for where we're at right now, which is, as of this morning, we're back drilling.
Okay, and so how do you move towards the end game? So you've got a historic resource, significant size, I mean globally significant, not just for Canada. And you've got to you've got to chase more pounds for start.
Absolutely.
So how do you go about doing that in an environment like this where money's so hard to come by for juniors?
Yeah, it seems to be a common theme. I think it's interesting at ATHA because we came to market in 2023. We've raised over $70 million into the deal. I've got a colleague sitting over there that's on his phone right now, but
taking notes.
Yeah, he's on the capital market side. We've got a good combination of a highly experienced technical team and good capital market strength. And there is money out there for good projects. Right, and good opportunities. I look within the Canadian uranium landscape and outside of the producers and nearing those groups nearing production, there are really two companies that are working on actual deposits, and so it's very narrow, Matt. And so the appetite Everyone understands the macro. When I say everyone, there's a growing awareness of the macro. There is a growing awareness of the opportunity within the uranium space. That trailed off and fell off late 2023 throughout 2024, correlated to the spot price. But spot price kind of found a bottom, I think, right? About 63 bucks a pound, came through 70. Sentiment is changing, etc. But to your point, how do you go from here to where we need to go? Expansion work. The drilling that we're doing right now, started the drill today about expansion around the deposit, the LAC 50 deposit. Last year, on the ground, boots on the ground, 3-kilometer long outcrop right at the edge of the deposit. 47% mineralization on surface and outcrop samples that hasn't been drilled. That'll be a key target area, obviously, naturally. And then this whole system sits right at the edge of a very large sandstone basin that's completely unexplored, not underexplored, it's unexplored. We did a bunch of fundamental work last year, geophysics, geochem, structural modeling, etc., to find a 31-kilometer long trend across the basin, high-grade mineralization on one side, in historic core, about 5.5%. 31 kilometers away, as the structure trends through the other side of the basin, 30% in outcrop, high-grade, unconformity style targets within a completely unexplored uranium jurisdiction. We like it a lot. Our technical team's view is that it's analogous to exploring in the eastern Athabasca Basin in 1960, prior to the discovery of Rabbit Lake, Key Lake, etc.
So, like, it sounds like you feel there's a lot there, and I want to get to it, but I also want people to understand the kind of commercial imperative for you, right? So, if I look at the gold space at the moment, got developers who are saying, do you know what, at these sorts of prices, I'm incentivized to get into production earlier. I'll start with a small starter package, and we'll build it from there, get some revenue flowing. How does it work in the world of uranium? You've worked at Cameco, you've worked at NextGen. How does uranium compare to gold? And how does that drive your ambition with regards to the scale you need to demonstrate to trying to drive those economics?
Yeah, I consider, just pulling this back to uranium specific, okay? We look at, I look at anything around 100 million pounds at the grades that we're seeing as a tier 1 asset, tier 1 uranium asset. And that's kind of the lens we view this through. The work that we've done to date, from an exploration potential perspective, gives us a direct line of sight to the scale that we're after. That's within the deposit. That's LAC 50. That's within the deposit area.
Not the other 16.
Yeah. Then you go across the basin, and we're talking about an area that we believe has multiple discovery potential. Discovery of multiple deposits.
But how do you, again, an environment like this, certainty versus expectation, right?
Yeah.
So does that shape the allocation of capital?
Exactly, and that's what it is about. It's about, making decisions on how you allocate capital in a risk-adjusted approach, okay? High probability expansion work around the deposit, high probability of outcome there. The forcing function, we believe, for growth there is work. We've de-risked it significantly with the drilling that we've done to date, with the work that we've done to date within the LAC 50 deposit area. And then, call it the torque, right? Like that we're explorationists as well, and get excited about drilling exploration targets. The opportunity to drill an exploration target in a basin that hasn't been tested, that has the setup that we're seeing, the geophysical signature that we're seeing, the structural signature that we're seeing, 30% mineralization in outcrop in the sandstone sitting above these targets, it's really, really compelling. So that'll be the mix.
Let's convert that into actionable activity from you. So you've got this 10,000 meter drill program?
10,000 meters, yes.
2 drills. So talk to me about how data flows into decision making with that example.
Yeah, 2 objectives. Expansion of the deposit area, discovery focus with the other drill. We aren't going to get pinned down on allocation of meters in one area or the other. because of a dynamic, we built up a process. I've implemented it a couple places. Get data from the drills, feeds right back into live dynamic models. That allows you to make real decisions in real time in the field on how you're allocating capital. Okay, so we go into these targets. We hit Athabasca style mineralization at KU, the target we're about to drill. We're obviously going to allocate more meters there, right? Base case, continue to expand at LAC 50. So 10,000 meters, those will be allocated throughout the course of the program.
Okay. I guess final words, your hope for the sector, because we need more companies like you to do what you're doing, to find these pounds in the grounds. They're struggling to access capital. They're struggling to make the discoveries, therefore, and it kind of looks like very bleak for the North American uranium space at the moment. Will it all work out?
Oh yeah, I could not. I think we're in the best spot, in the best commodity, in the best space, period, right now. The outlook for uranium, we can't, I don't know the time, right? Like, is it tomorrow, is it a month from now, is it 6 weeks from now, when the uranium spot price is gonna move? I wish I knew that, I don't. The directionality of it, though, is extremely, extremely strong, moving one direction. And look back to 2006, 2007 timeframe. You look at spot price, action in spot price, it goes parabolic. You look at the underlying equities associated with that. I think we're going to be all right in the uranium space, Matt.
That's what I want to hear, Troy. Thanks very much for your time. Appreciate it.
Thank you.
Thank you. Thank you, everyone.